Hey everyone, welcome back to my channel. Today I wanted to talk about a very simple method I've been using to trade ES and NQ using SPY and QQQ gamma levels. I've recently been under a lot of pressure in my personal life and I haven't had a ton of time to prep for my trading. I noticed while doing some backtesting that whenever we were holding an order block on ES or NQ, it typically correlated with a gamma level on SPY or QQQ. I know this sounds very strange, so I decided to make a video about it to put this information out there. The best part about this strategy is that it doesn't require any special indicators or third-party tools. I did find it while using gamma levels via TradingView, but I'll show you a shortcut that you can use to avoid needing any third-party services. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradingView, and Elite Trader Funding. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. So, just to show what I mean by this, I oftentimes use TradingView to go in and look at gamma levels to see where the positive gamma levels lie, where the negative gamma levels lie, and how strong they are. And there's a couple ways you can do this if you're interested. I've talked about it in several other videos, but you can do this by looking at the options dashboard. They also have this on the stocks dashboard. And you can even scroll down and view the gamma levels here to see them shown differently, so you can see how much net positive gamma or net negative gamma is centered around a certain level. And of course, we've talked about SpotGex as well, which makes it easier to view these levels. However, we don't necessarily need this for what I'm about to show you. So before I should say that this is purely a future strategy. I mean, it does obviously work with SPY and QQQ as well. At that point, you would just be trading standard gamma levels. But I've been doing this on my prop account. And before we get into it, I should mention that if you use my coupon code FATTYTRADES right now to get a prop account, you can get a discount. Right now they're doing 65% off for all the evaluations and cheaper resets if you do. Hopefully you don't need to reset, but if you do need to reset, it's $50 resets, which is nice. And so at this point, you can get as a 10K eval account for as little as $30 a month, which is incredibly cheap. So if you do want to trade futures, you don't want to risk your own money, or you want to get better at trading while using real money with limiting what your losses would be, then I highly recommend using a prop account. I've done videos about this before. I myself use my prop account to trade regularly. I'm a huge fan of prop accounts, and they help make me a better trader. And without them, I wouldn't be where I'm at today. But that being said, let me show you what I'm referring to here. So there's a couple different indicators involved here. Now, the three that you'll need to use for this strategy that I recommend using is the standard VWAP indicator, which is this blue line I have on my charts. You can use the periodic volume profile. And the way I have this set, just to go through that real quick, I've covered this in other videos, but I have the value area high, the value area low, and the POC. And I do choose to extend those to the right when I'm trading futures, just because with futures, they're open for a longer period of time, so sometimes the value area lines will disappear, which you can see shown on my screen here as red, yellow, and green. And then I keep regular volume on there because that's how I use it when I'm reading candles, which I've talked about in my volume price analysis series. So you can see on my screen I have ES futures here, and I have micro NASDAQ. Now this works for any futures. It doesn't matter if it's minis or micros, any of it will work. And you can see all these white lines I have here, and at first it looks like a mess, but there's a reason for all of these, and this is what amazes me. So what I did is I plotted each strike. So basically every gamma level is always centered around whole number strikes on SPY or QQQ. That's because when you buy options or sell options, it always has to be on a strike that options are available for, which is always these round numbers, which people call psychological levels, but the reality is the reason they act as levels is typically centered around things like gamma and vanna. So let me turn off the periodic volume profile for now so we can see this more clearly. I'll leave the VWAP on because the VWAP does also act as a level in this strategy. And the value area high and value area low do as well, but I'm just hiding that to make this more clear. So we can see on the left side, I have ES, and on the right side, I have NQ. And it's very important to have them both up because these are tightly correlated. And when we're reacting to a QQQ gamma level on NQ, which I know sounds odd, typically we'll see that same reaction occur on ES. So in this case, today, actually, it looks like we were reacting to the SPY gamma levels on ES much more cleanly, but here's a good example. So I'm hovering my cursor here, And it looks like for no reason, we just reversed in between gamma levels. However, if you look to the right at NQ, you can see where my crosshair is lined up perfectly. And you can see we were actually reacting to the 270 gamma strike on QQQ. And so the thing is, the point values are dramatically different when you're looking at NQ or QQQ. So if you go online and you Google what the point difference is, they say QQQ is 1/40th that of NQ, which is actually not true. And same with ES and SPY. If you Google it, if you go online, they'll say it's 1/10 ES, or excuse me, SPY is 1/10 of ES, which is not true. So what you actually requires you to do to get all these gamma levels up is the easiest thing to do is just pull up a calculator. And so if we look at where we're at on SPY, and I have the Sonar Labs indicator up here, which I do still love, and I do highly recommend using this indicator as well. But this is sort of a easy mode strat that doesn't require any third-party indicators or any third-party services for that matter. Of course, everything's better if the more data you have, the better off you'll be. But this is a totally viable strategy without any of that stuff. So if you go in here and you just look, okay, SPY is right around, well, right now in the after hours, it's actually pushing into 369, but all day it was basically bouncing around between 365 to 368. And so we can see that reflected here. I have SPY 365 all the way to SPY 368, and we can see it bounced around on NQ. Now the same thing with QQQ, I have 270 marked here, and I only marked every 5 levels, so 265 to 270 you can see here. So, and then also have these specialized levels on ES. So I labeled this ES GEX, which you can see is 3694. And down here I have 3644, which is the same way. And if we were to keep scrolling down, you would see I have 3594, which is ES GEX level. This is purely tied to the ES and SPX relationship, because futures, these ETFs, and these main indices, so like the SPX index, it's all very complicated. There's underlying holdings where the weightings can move the ticker. Buying and selling and hedging on SPY can affect ES and vice versa. Same with SPX. So they're all correlated, which is actually why this works. But I did want to account for the strikes that are centered around SPX, and this would normally be at 3600 if we were trading SPX. However, the reason it's at 3594 is because if you take 3600 and you subtract it by 6, you get 3594, and that's actually going to be a common level for ES. And if I scroll back here, you can see price reacts to it, which you'll see all the time. Same with 3644, we could see price reacting to that level. So whenever you have those strikes, it's every 50 points basically. So 3600, 3650, 3700, 3750. You subtract those by 6, and that's how you get these special ES levels that I have marked here. So those are the first things we should mark down. And then we want to put all of the SPY levels on here, the main SPY strikes. And we can get those simply by multiplying by 10.6. So if we take the SPY, so I'll open up a calculator here, and if we take SPY 365 and we multiply it by 10.06, we can see we have 3671.9. So in this case, I round up to 3672, which you can see right here. And then we just want to do that for each of the levels. And I'm actually going to write an indicator for this because it's much easier to do this in code. I just want to show you how I got these. And then when I eventually get around to writing this indicator, I'll make sure I post about it so everyone's aware of it. So this would be 3682, which we have right here. And then we want to do the next one. So 367 is actually going to line up so close to that ES gamma level that I was talking about that's correlated with SPX that I didn't end up putting it on there, but you'll see here in a second that it actually lines up with 3692. So in theory, you could go in, oops, accidentally hit that there. You can actually go in and add that level if you want to at 3692 and mark that down. You can see it just sort of adds noise. There's not a real benefit to it. And price seems to respect the 3694 better anyway in my back testing. So whenever it's real close like that, I just leave that off. So again, for SPY 368, we'll do the same thing, multiply it by 10.06, and you get 3702. And I mean, you could see on several occasions here, this level has been here well in advance. I've had this on my chart for about 2 weeks now, I want to say. And I should state that I've only been using this method for a limited time in real trading, but I've back tested it thoroughly, and it's astonishing how well this works. And so we can see that we reacted to 368 two separate times here where we had clear indications that we could take shorts. And so we see these wicks bouncing off. You could do a limit order in this case, or as you see the candle forming, you could short and you can set your stop. I recommend using a stop about 3 to 3.5 points above the level itself. You can see in between each level, it's anywhere ranging between 8 to 11 points, depending on the strike, the distance between the strikes. So essentially, you're risking 3.5 points roughly in order to make 8 to 11 points each time if you're trading gamma level to gamma level. But oftentimes we cross between these gamma levels. And as you can see here, if you had shorted, so in this case, we had about 9 minutes to take a short off of this gamma level this morning when we saw that it wasn't breaking. And at that point, if we just trailed it from level to level, so once we broke below here, we can slide our stop lower. Once we broke below here, we could slide our stop lower. And you can see at this point, once we broke below this gamma level and we slid our stop, came back, and we would have been tapped out. On top of that, we had this VWAP hold at this lower gamma level. So this actually would have been a great point to reverse and go for longs and ride it back up. But I mean, you can see at this point, you're capturing, if you had a 3.5 point stop, the risk reward on this is phenomenal. And this isn't unusual, which is what I want to point out, is that it respects these, ES respects these SPY strikes incredibly well when you multiply it by 10.6. And you're probably wondering where I got 10.6. And essentially what it was, if you look at SPY, now it doesn't work in the after hours if you do this calculation, so I can't show you based off SPY's price right now. But all you have to do is look at where ES is at during the day and look at where SPY is at during the day. So let's say if ES was at 37.02 and you divide that by SPY's price, which would have been 368, then you see, okay, 10.059. So now you know, okay, if I multiply the SPY strikes by this, then I can get the ES levels. And it's worked like this incredibly well for a very long time. They haven't really changed. I do still check them from time to time to make sure that the math is lining up right. But it's just astonishing how well this works. Even on choppy days, you can literally just trade gamma level to gamma level. And if you see here, you usually get multiple attempts on the 3 minute. In this case, even if you missed this little run up, it came back down to let you in if you had a limit order, at which point you could tap out at that ESGEX level. Now, that's for SPY, but you can see there still are times where we're in between a level and it just seems to reverse for no reason. Or it respects the VWAP, and that's why I do have the VWAP on here, because a lot of times institutions and retail traders will fade the VWAP or use the VWAP as a dynamic level or allow the price to retreat to the VWAP. So it's just nice to have on there. It works great as a dynamic level, so I always leave it on there. So I have the GEX levels and the VWAP here. Now, NQ comes into play in the same exact way. If you do the math with QQQ levels and NQ levels, you actually get a multiplier of 41.25. So if we take this 270 level, it's the same exact thing. So if we do 270 times 41.25, we get 11,137.5, which is what I have right here. And we can do that for each one of these levels. We can do that for 269, 41.25. And you can see 11,096.25. And again, you can see how well price is reacting to this level. And whenever it's not reacting to this level, as we can see right here, it looks like we come down and we just reverse for no reason in the middle of this level. Well, again, look left at ES, and you can see it's because we were reacting to an ES gamma level. So in this case, we didn't reverse for no reason. We held an ES level. And what this means is that based on whichever level is being respected, so we can see here NQ's coming up, we seem to turn around at no point. We see this wicking out, and the first thing I ask myself is, okay, why are we stopping here? I look left at ES. Sure enough, we're holding that ES gamma level. That's actually related to an SPX strike of 3,700. 3,700 minus 6 is 3,694. So we're holding the 3,694. So at this point, I look to take a limit short here. And my plan is to ride it down to the next gamma level, or keep an eye on NQ to make sure that if we're holding here, we do indeed actually break this gamma level, which we should because it's not being respected. We want to play the level that's being respected, but I'm going to look to take profits when NQ gets to this gamma level, which in this case I'll just mark it down, which is 268 in this case. So the QQQ strike of 268, which we can see would have been a perfect take profits. We get down there and we get a wick indicating we hold. That means it's time to get out, right? I usually, depending on the strength of the hold and the amount of the volume coming in, and this is something you just need to get a feel for as a trader. Unfortunately, there's not really a better way to do this, but as you get used to trading, you can see, okay, when it's coming down and it's forming this wick, you can get out mid candle. If you're waiting for candle completion, the 3 minute is fine to do that. Just note that you will lose out on some profits if you do that. And with NQ, as I mentioned with ES, oftentimes having a stop of about 3.5 points, I use with this strategy. Now with NQ, it's a little more. Typically, I look for a stop of around 11 points, which I don't necessarily love. However, in between each of these gamma levels, we're looking typically at about 42 points, 40 to 42 points, hence the 42.25. So in that case, the risk reward is still phenomenal. It's still 4-to-1 risk reward. But if you're not comfortable with that with risking 10 points on NQ, I mean, it is only $2 a point if you're doing micro, so that's important to note there, that you're really only risking 11 points. You're only risking $22 per micro contract in an effort to make approximately $80 to $88. So to me, that's well worth the risk. But just note that NQ does move a lot faster. The point value is higher, so I just wanted to point that out. But I tend to play whichever level is being respected. So again, if we took this short off ES and then we see that we're holding at this NQ gamma level, at that point I'll exit my ES and enter my NQ gamma level. And my intent will be to ride it to here. However, we know that this isn't necessarily being respected, even though it does sort of get respected right here. And actually, this would be a cue for me to take profits. I'm not going to pretend that I would hold through this because these wick rejections show that would tell me that we're not necessarily holding. But then again, if you're watching ES, it looks like we are blowing through it. And one trick you can use is if we were to enter off NQ, is every time we're moving higher and we get a candle completion, you can start sliding that stop below those candles. And you do want to give yourself a few points room, just because, especially with NQ, ES is a little more stable, but NQ you will oftentimes dip a little lower and then move higher as a great way of stopping you out too soon if you're not familiar with trading NQ. And I think that's why a lot of people favor ES. You can make a lot more money with NQ. There's more volume on NQ, but just be aware that it's trickier. You have to have what feels like deeper stops. But despite that, I hope you see what I'm getting at here. So as we move higher, NQ seems to just hold out of nowhere and start reversing. We look at SPY. It's holding at a SPY GEX level. It comes down, retests this ES gamma level, which seems to be nothing on NQ, but it is indeed reacting to the ES levels. And we come down, and at this point, it just makes more sense to trade ES because ES is working better. However, that's not always the case. And I want to stress that. That's why it's so important to have both of them up, because there are times, and I'm going to see if I can find a good example here, but if we're looking at the other day, now, it was so volatile last week that we were just ripping through so many levels, which isn't usually the case. But VIX has been high, volatility has been extreme. We had CPI data, we had FOMC. So, I mean, there's been a lot of macroeconomic events that are causing extreme volatility. But you can see that even though, and this is why I talk about this 3.5 point stop, because it will prevent you from getting stopped out. If you take a limit order on these gamma levels, wicks like this won't stop you out. And honestly, even if you do get stopped out and you immediately see it coming back, sometimes the best entries happen on this case, and that's because they are indeed stop hunting to grab liquidity to just drive the thing lower. But we can see now, again, it looks like in this case it's respecting ES a bit better than it was respecting NQ. Let's see down. Okay, so here's an area on NQ where it looks like, so right here, this NQ gamma level, so this is 266 on QQQ, which on NQ is 10,972.50. We can see on ES, if we look over here, it just seems to stop and reverse out of the blue. Well, sure enough, it was an NQ gamma level. And so what you can do is you can watch price react to these gamma levels, and whichever one is taking the showing the cleanest reaction, ideally you get more than one test. In this case, this can be difficult to trade because it was just one test on the 3-minute. If you use something like the 1 minute, you might have more opportunity to grab this. So this could be difficult, but oftentimes we'll get multiple tests, and maybe that is a reason in this case to trade ES, because you can see we do have 3 wicks. You can tell that we are actually reacting to a QQQ gamma level that's on NQ, but this is actually giving you ample time to get into this short, and if catch anywhere from 8 to 19 points roughly, based on where you as you trail your stops, how that plays out. So but again, I'm a big proponent of trading level to level, and these SPY strikes on ES and QQQ strikes on NQ work far better. It just blows my mind how well these actually work. So I wanted to make a video about it because it's just such a simple way to identify these levels, and just you can take trades off either one and watch both of them because they are tightly correlated. And when one doesn't seem to be respecting levels, it's because the other one typically is. And you can watch both of these QQQ and SPY strikes while you're trading futures and capture some incredible trades and really take advantage of these big moves. For instance, we could see this VWAP hold here as we just blow through ES. You go through multiple strikes, and you can gradually just keep trailing after each candle close and capture so much of this move. Even if you just take profits at the very next strike, that's fine too, because you still have great risk reward. You're still risking 3.5 points to make anywhere from 8 to 11 points depending on the strike difference. So that's a phenomenal trade, even if you don't capture the whole thing. But anyway, I hope this helps someone out there. And one other thing you can do to make this strategy even a little bit better is if you add in the periodic volume profile, you'll get the value areas on there. And as this unfolds throughout the day, sometimes you'll see, and this is another thing that kind of blew my mind. So you could see here we were reacting to an NQ gamma level. But what I never realized before was if I was just looking at SPY, I would say, okay, we're reacting to the value area low on SPY. Well, the reality is it's the NQ gamma level, but the volume profile levels more often than not line up with the other tickers. So a ES volume level, a value area level, typically is an NQ gamma level, or excuse me, a QQQ strike. QQQ gamma strike on NQ that's being responded to, but they're just so tightly correlated that the way the volume plays out is it turns out to be a value area. So anyway, I hope this helps someone out there. It's been a method I've been using to successfully trade with limited prep time. I'm in the process of buying a new home. My wife's pregnant, and I started a new job, so I have a lot going on, and I haven't been able to dedicate as much time to this stuff as I would like. And I apologize for not posting videos as often, but I'm doing my best to get this content out there, and this is how I've been trading with minimal effort, and I'm just blown away by its success so far. So hopefully you find that interesting too. Make sure you back test it. It can feel a little weird watching 2 tickers and trading gamma levels on each one. So sometimes you take an entry on an ES gamma level and exit when you see price reach an NQ gamma level, and that can feel weird, and it takes practice. So I highly recommend back testing it first, but I hope this helps you out, and I appreciate you watching.